Well, it's time for our first interaction with the top management of IHCL to really understand that how will 2025 be different from 2024? Will the momentum and growth continue? What about the pictures of a slowdown we got from Goa? Are they real or just a social media buzz? Has foreign arrival normalized? And at a time when in general the comparative landscape seems to be changing, what really would be the differentiating factor for the industry and for Indian hotels? But before we get into this whole big picture, debate and we get into specifics, I just want to recap the numbers for the quarter gone by. Brilliant on all quarter, both in terms of margin. The base effect has not kicked in. The quarter gone by was a peak quarter, but the growth momentum both sequentially and again annually just continues. So the dream run for IHCL and for the hotel industry continues. But will this dream continue? Or after dream, there could be a nightmare. Chhatwal Saab, so nice to have you. The dream run continues, like they say, the honeymoon period continues. But with dream and honeymoon, क्या होता है? सबकी shelf life होती है. Will it continue?
I think so. I don't know about dream run, but I think we will continue to perform and outperform. The reason is the change in the business model. See, we are coming from owner-operator business, and for the last 7-8 years, we have worked very hard to find the right balance in capital heavy and capital light, in traditional and new businesses. So the capital heavy, that is our owned assets, in a time when demand is outpacing supply, provide the requisite operating leverage very positively. But the capital light businesses are helping you to drive the margin expansion because that is the nature of that business. It doesn't add the absolute amount, but it keeps adding the percentage points. So what it does is that if you have that performance with 80% of your pipeline built on capital light and already today having a balanced portfolio of 50-50, that even when the headwinds come, you are better hedged. So you're not dependent on one brand only, which is our crown jewel. I mean, Taj was and will remain the crown jewel, not just for Indian hotels, but for India. And we will keep improving and keep taking Taj to newer heights. But the rest of the businesses around it, the change in the business model around it, will provide the needed support in driving premiumization and also premium returns and premium performance, but at the same time the right hedge should there be any headwinds which may come. I don't see them coming in the next 2-3 years, but beyond that period there will be. Life will not keep going on in a straight line up, but whenever they would come, we would be much better position than we ever were in our 121-year history.
Now, for the quarter gone by, it was expected to be a strong quarter. It has turned out to be a great quarter. For me, what really stands out is that margins have expanded year on year, which is what I think is the hallmark. How much of the margin expansion has happened from properties which you currently own, where rates have gone higher, and how much has happened because of the new properties which you've added, which are adding to more benefits?
Actually, if you look at it, that standalone has done very well on the margin part, but on the top line growth, it is not at the same level as consolidated. So it's very good. It's at 13% top line, but consolidated is at 16. The traditional businesses is all combined with the new is at 16. But if we take the new businesses, which are small, are already showing 40% growth in the same quarter. So all in all, this is because the occupancy levels are high. So your ability to charge is higher. And I don't see that change coming, because if you're going to Rambagh Palace, you're going to Rambagh Palace. You're going to Lake Palace, it's Lake Palace. So if you're in Taj Mahal Palace in Mumbai, you're in Taj Mahal Palace. And if it's Taj Mansingh in Delhi, it is Mansingh. Their ability to charge is significant. And we are still at a low. Because if you convert these amounts into dollar, the quality of properties and the kind of service we provide, and these properties benefit a lot from non-Indian business, whether they come in the form of government delegations or they come in the form of foreign tourist arrivals, the dollar pricing is at a very low level. It will never be at par with the West, but we should have at least, if you are moved to number 5 economy in the world, expected to be number 4, targeting to be number 3, you should at least be able to charge half the average rates that even a Taj brand achieves outside of India, in London, New York, Cape Town, etc., etc. So even in Dubai, I would say, for that matter. So I think we are very pleased, and a lot of this comes from to come to your original question, a lot of this expansion is coming from the traditional owned portfolio, because we have invested very heavily as asset management has been a key metric for the management, because you have all these wonderful spaces, you have all these wonderful assets, and there is so much you can do. So we are very, very pleased with all the changes. Look at Taj Mahal Delhi, which is popularly known as Mansingh. The rent increased by almost 79-80% rent increase, from 17.25 to 32.5, but the absolute bottom line performance is higher than it was at 17.25. So we must have renovated and managed that asset in such a way that this premiumization was possible.
I'll talk about a specific market, Goa. Now, Taj has an indomitable market share there. I think a market share in Goa is more than 60%.
Depends how you count, but we have, let's say, almost 52 different kinds of outlets with different brands operating in a small state like Goa.
Okay. Now, there were pictures that Goa this time was not great in terms of tourism. Social media, at least at the beginning of the year, were abuzz with the fact that the tourist arrivals were low and they were not exciting. Is that reality which dawned on your Goa business this new year, that it is slowing down?
We have done well in Goa, coming again from a very high base. There was kind of a flattish result on 2 of our properties, that is Fort Aguada and Holiday Village, but because of our asset management initiatives. So we renovated 1/3 of Holiday Village 2 years ago, 1/3 last year, and 1/3 will be this year. So 100% renovation would be complete. That causes displacement. Same in Fort Aguada. We're going to take now the main block into renovation. But your ability to charge the moment the renovation gets completed is very high. So we have seen that in Holiday Village. That's why Holiday Village has done better than it did 2 years ago. Fort Aguada has also done better than it did 2 years ago, and will do the same this year. But maybe the jump in a significant is not as significant as it would be as of next financial year.
So will it be fair to say that for Indian hotel there was no slowdown in Goa?
Absolutely not.
But there was a slowdown in Goa?
I don't know. I saw that from the reports, but my last interaction with Honorable Tourism Minister of Goa, Mr. Counter, at the 50 years celebration of Fort Aguada, it was very positive. As per him, the figures were positive, and a part of his speech was as if Goa is unfairly being attacked by some people, that no, it's negative. But he saw from objective point of view in front of an audience of 200 people that all the metrics that they have, that Goa tourism has, is showing an increase in all room nights, in terms of arrivals, etc.
So for 2025, which is the current year, how much of your growth will come purely because of new room addition across portfolio, and how much could be a function of pure inflation, where there is 4-5% inflation and you will continue to take that price hike?
See, the majority of our growth is capital light. So it's very important to differentiate, are we talking enterprise level or are we talking at consolidated level? Whenever we report results, it's at consolidated level. But most of the hotel companies across the globe talk about enterprise level.
Yeah.
So we do believe that given our strong openings momentum, that next year we plan to open 30 new hotels. Now, 30 new hotels with more than 25 or 26 on capital light model, the growth contribution would be double digit or very close to it in terms of top line. But the way to look at it is not just 1 year. is all the hotels opened in the previous 2 years, because there is a stabilization phase. So hotels take 2 to 3 years to stabilize, to have the optimum level of occupancy and rate. And in the next 3 years, we plan to open 100 new hotels. We have 125 approximately in the pipeline. I do believe that a significant amount of our enterprise level revenue will keep coming from new businesses and new openings, where the support and the backbone will remain our standalone and our traditional business, which we keep investing in, and which is what makes Taj a very iconic brand.
You've said that the Indian hotel story is centered around India's growth. The growth has come down. How come the drop in the economy has not impacted you?
I don't know if the growth in India has really come down. It's a few basis points here or there. That can also come back very fast. That's one. But having said that, our sector definitely benefits from a stronger demand versus the supply. The supply that is coming in newer destinations. So when you have all these new highways being built, or new airports being built, or the new train stations, the renaissance of the train stations, I think what is changing is it is creating new demand centers. So supply is coming more than 50% in the newer markets. It's not coming at that same pace as it used to come 10 years ago in Mumbai, in Delhi, in Bengaluru, in Goa, etc. So I think given that still these 10, 12 markets in India drive really a lot of strong business, coupled with something which has grown very fast in the last few years, is spiritual destinations. I think spiritual destinations are outperforming even my personal aspiration that I would have thought. I would have never thought that Pilibhit House in Haridwar will do rates north of 30,000 rupees consistently, or Anand Kashi near Rishikesh, or the Taj in Rishikesh. I mean, that Taj Ganges will do well in Banaras, and that we were doubling the number of rooms. We were adding a 100-room block in Taj Ganges in Banaras. We are extending the Taj Nadesar Palace in Banaras. So that was expected. But to get those kind of numbers, we have opened our second hotel in Tirupati. After the Taj, we opened a second one under Indian Hotel Selections series. So I think a lot of spiritual demand is very helpful, and that is resistant to any GDP growth or any crisis. Has nothing to do with the GDP growth. And this is something very new. It was always there. But the number of people now going to Ayodhya, for example, I mean, this is unheard of. Number of people going for Mahakumbh. Yes, it comes once in a century, etc. But look at the numbers. It's, I think, the biggest event in the world today. So, all in all, I think the sector is very well positioned to benefit from these activities. And that is very good, because it creates a lot of jobs and a lot of indirect jobs.
Okay. So let me start recapping some parts of what we've interacted with. Then I'll move to the second part, which is that headline number one for us is that the current year will be better than last year. There is no slowdown in any of your large markets, and there is no trend reversal in business travel also. And you still feel that even though India may slow down, there could be pockets which FMCG companies are calling out, luxury car makers are calling out, QSR companies are calling out. You don't see any indications or early indications of a slowdown. You are committed to grow. The asset-light model will continue. And now at 50-50, that will ensure that the margin progressively will start improving. Okay. Now, in terms of the big picture, we are in 2025. What do you think could be the capacity of the Indian hotel industry in number of rooms in 3 to 4 years? Because the kind of positive vibes we are getting from you, your industry pretty much seems to be endorsing that, because everybody is in this high growth mode where now it is the race of who can finish the hotel fastest. Where do you see this industry moving in terms of absolute numbers in 3-4 years?
I personally believe, and I'm convinced, that the 200,000 branded rooms in India are definitely going to increase by 2.5x in the next 5 to 7 years.
Okay.
No matter how long it takes to build hotels and to finish them. And that is also needed. India is among the G7 countries or G20 countries almost at the lowest correlation of number of rooms versus the population. I mean, it's so low that there is a huge space to grow. That is one. The second is obviously consolidation will come. Some of the older supply will just go away.
When you say go away, what do you mean by that?
I would say like, circuit houses.
Okay.
For example, I mean, how long are the state governments and central governments going to keep operating circuit houses? If I'm a bit, I'm significantly older than you, Nikunj, but when I was growing up, we used to travel with our parents on the leave travel concession and never went and stayed in hotels. We went and stayed in some uncles or aunts' houses. That is gone. It's history. Similarly, some of these old accommodations will be redeveloped, remodeled, and we have done that. Within Tata Group, we have taken over so many of the bungalows and villas of Tata Power, Tata Coffee, Tata Tea, and converted them into Ama. So it's not that there is going to be a consolidation of the existing supply under brands with a renovated and a new product suitable for the markets now. So a part will come from existing, but a significant part will come from new hotel developments. I mean, we are building, we doubled the size of Taj at the Bangalore airport. But look at the Bangalore airport. I mean, it's just phenomenal. And at the same time, despite having that 400 room Taj property, we are adding 1,000 rooms more, 750 with Bangalore International Airport, with Vivanta and Ginger as a combo hotel, very close to the Taj, plus a gateway just at the entrance of the Bangalore airport ground. So I think this is the kind of supply that will come as airports and traffic grows. Look at the number of planes that have been ordered by India under different airlines, whether it's Air India or Indigo or Akasa or whatever. So all those planes will fly, they will carry the passengers both in and out of India, and they will need a place to stay.
Okay. So 2 to 2.5 time expansion, if that happens in 4 to 5 years, would that according to you will not be excess? That is something which the market dynamics will be able to absorb. But Taj is now thinking big. Indian Hotels is now not only experimenting, they are now ready to take a formidable giant leap. Your market cap is above 1 lakh crore. It is staying there. Your cash flows are strong and predictable. Debt is gone. Are you ready to take that big inorganic growth leap? Because for you now to grow organically, the template is set. What can you do to maximize your balance sheet? How are you doing that?
Well, we are very well positioned. At the end of this quarter, we reported a gross cash of 2,800 crores. We don't have any kind of net debt in the company. And when it comes to India or pan-India, we are well positioned to do any of the inorganic growth should that be offered in the marketplace. Outside of India, we will not do that. We'll be very selective in very carefully growing the Taj brand on a capital light model. So that's what we are doing. We will be opening a few hotels in Bhutan and another one in Frankfurt this year. Very soon, 2 in Bahrain and 2 in Saudi Arabia, all on management contract basis. So, of course, we will look for opportunities, selective opportunities, if there was a little bit of skin in the game needed to get destinations like Singapore in Southeast Asia. We would do that because you'll not get it on a pure management contract. Is that important destination? Yes. Is it important for Taj? Absolutely. Is it important for Indian businesses? I mean, there's no question about it. Why have we not gotten it in last 30, 40 years or even in the last 7 years? Because the numbers have to make sense. We are not going back into single asset acquisition like we did 20 years ago. That is definitely not a part of our business plan. That's what we have communicated to the market. And that focus and discipline is what has driven 11 consecutive quarters of record results that we have been able to report.
You know, I mean, signal to wrap the show, but I'll seamlessly ask two more questions. And we're just nearing the budget. This sector has been crying for few very logical, support from the government, and one is on the infrastructure status. Do you see this happening this time? I mean, job creation is something which the government wants, and the hospitality sector, if given the infrastructure status, can really add a lot of jobs.
Well, infrastructure status does not have to be part of budget. It's just it does have the status, but there are a lot of caps which were put in maybe 12, 14 years ago. I don't remember the exact year, whether it was 2012 or 2013. And those kind of caps need to be removed because maybe it was relevant at that point of time, and that should go. It will be very much in line with the government strategy of building infrastructure in the country. So when you're building all these places, as I just said, you need a hotel there too. It will propel that growth. What it does is helps you get loans or debt, raising debt at more competitive pricing, and provides you some kind of moratorium in terms of repayment. And that is why, because it's a capital and labor intensive sector. So you need that first few years, as I just said, also for hotels to stabilize. So that'll be good for the sector. That will be in line with the government strategy. And industry status at the state level. 90+% of the total room supply in India is non-luxury. So supporting the sector is not supporting luxury. Supporting the sector is supporting a wide range of people who work 24/7, 3 shifts in a day. They work on Diwali, Christmas, New Year, and are not among the highest paid, rather among, it's a low paying sector even in terms of salaries. So I think taxing it at the highest level at a state is not the ideal thing. So all in all, I think a lot of states have come forward and have given that industry status because tourism is a state subject. Few that are left, I would encourage them to do so at their state level. I think what we must have is some form of a campaign on foreign tourist arrivals. And Incredible India was a great campaign which was launched 20 plus years ago. It did very well for India. And I think there is no reason why we should be with a country with the highest amount of sea mass, with the highest amount of beaches, with the most beautiful mountain ranges, and the kind of spiritual tourism with all religions in the world that we can offer. I see no reason why we should not get our fair share of foreign tourist arrivals, and that's something I hope gets reflected in terms of our spending outside of India, whether in terms of social media, marketing. From the government, we are doing our share as Indian hotels and are contributing already in marketing India outside of India.
So if I say, Mr. Chhatwal, that higher for longer really could be the right term in which we can capture 2025, which is that all is well and you are starting the year on a high note. And as of now, you believe that the momentum, what you see in the near term, when I say near term for next 2 quarters, it's quite decent and satisfactory.
Nikunj, I would go beyond that. I think we are at the beginning of a very long journey, because from the 5th largest to the 3rd largest economy, from Incredible India to Inevitable India, from a poor country to a Viksit Bharat, I think all in all, what does that mean? That means there will be a good feel factor for people, more and more people as years go by. And when there is a feel good factor for people, then you also feel good when you go out to restaurants and hotels and you like to see and like to be seen. So I think all in all, the sector is very well positioned. A few quarters here or there may get some kind of headwinds, but I see this India at 100, a very different hospitality sector than we know today.
तो ये साल आपके वो जो नींद के घंटे थे पूरे हो जाएंगे, अब चैन की नींद आप सो सकते हो, बिजनेस की टेंशन नहीं है, आराम से सोएंगे साल. Can I say that is the resolution for you this year finally?
Definitely, it's very important, and since you and I started interacting, it's many years, so I have become that many years older also. So
बिजनेस अच्छा होता है, चैन की नींद आती है, तो
चैन की नींद आती है, और नींद से बेटर कोई और रिलैक्सेशन का मूड है नहीं. तो I'm very happy to see that you remember that and you have the concern for my sleep.
That's what friends are all about. But thank you for being a friend of the Times Network. And, I think 2024 for me was just one of those years where when you reach a market cap in terms of a threshold level of 1 lakh crore, it's a number which everybody just applauds. And I'm sure that we've applauded the journey of Taj or Indian Hotel from COVID of 10,000 crore to 1 lakh crore. Soon we would be applauding 1 lakh to 2 lakh, given the kind of momentum you've shared. I don't know when, but I see that coming very soon. Appreciate your time and good luck for a great year ahead.
Thank you so much for having me, and all the words that you just now mentioned, I hope they go directly into God's ears.
Thank you very much.
If you like this video, then like, share and subscribe to ET Now.